It was 2 years ago, I guess, that we were at this conference at the Markel meeting, and we presented Dish as one of our best ideas. And I remember the blank stares we got out in the audience when we talked about it, but we were convicted in the stock then, and we are now. I think as long as the melting ice cube is funding something bigger and better, we were okay with that. If they could fund an enterprise or a different part of their business, which was going to be a multiple, we thought, of what was melting, it made sense for us. And when we laid out the investment case 2 years ago, it was, as you say, largely based on the value of the spectrum and whether they could use that or not. If they couldn't use it, it was essentially worthless, right? Tyler Mancello, who is our analyst, has been following the story for a really long time, and he just kind of saw through all that and said, look, what they're trying to do is revolutionize the 5G wireless industry. And if they can pull this off, this is a game changer. So we didn't really need that to happen to realize the value that we saw. But in the presentation that we did, we talked about a potential partner being Amazon and AWS. And here we are. I think that adds legitimacy to the business. And we'll find out in Q3, right, when they launch in Las Vegas, like how real this thing is.
Mm-hmm.
If you go back and look at the story and then buying up the spectrum, that goes back, 10 plus years. They had a plan and they were executing on it. And as we know, when you start a business or run a business, like things change, right? So things come up that you didn't think. Sometimes it's better, sometimes it's worse. And Charlie's kind of a funny guy and doesn't suffer fools. And I think that rubs the analyst community the wrong way. So he doesn't have a lot of friends on that side, I don't think, and I don't think he cares either. But you just look at the past success, right? Like what has this person been able to do? Has it been able to execute on the visions that he's had in the past? You're betting on the jockey a little bit. I mean, that when we were first invested in the story, they needed a network. They needed something to not lose the value of that spectrum. And if they could execute on that piece, which we thought was highly probable, we were going to make money. The first initial base case for us in terms of valuing that spectrum is still in place, but now the optionality on the upside is substantial. There was a fundamental misunderstanding from the investing public about the cost because he was doing something new, right? There were no legacy costs. It wasn't a traditional build out. It was something that we've never seen before in this country with regard to wireless and 5G. And so it was hard to get your mind around. I mean, I think Tyler's done a great job in understanding that and helping us as a firm get comfortable with that. No easy task. I mean, he's followed the name for 4 years, and so it's accumulated knowledge that gives us comfort level that we have now. Some analysts in the investment community basically said, this is just a vendor announcement, right? They read it and just no big deal. That's crazy. I mean, this is a game-changing announcement. They said they're going to be one of the biggest customers on the cloud, and Amazon's also going to be one of their biggest customers. It was in the press release, so it depends how you wanted to read it. But I think it clearly was a difference maker. I think it validates the business model, and I think there's much more to come on that front. Over the next few years, you'll see companies get certain slices of the network. So you can basically have your own kind of internal wireless network where you're not outsourcing your security to Verizon or whoever it might be, that you can internalize that and have more control over it. And I think that the start of that is what's happening with Amazon. And I think we have this meeting in 2 years and we're talking about this. I think that'll be the biggest story and by far the most profitable thing that they do. If you look back a couple of years, and just specifically in the position sizing of Dish, where the outcomes was more uncertain, it's kind of a probability-based investment, right? Those are just much smaller in nature and more plentiful, right? And so where there's less questions about the business model and where they might be headed, those position sizes are much larger. We're hoping that it certainly seems that way, that Dish is going to be one of those kind of stocks for us. In a normal market cycle, right, which I would say this is not, I'll
I'd
preface
agree.
it by saying that. 20 to 30 companies. So we'll have 5 to 8 kind of core holdings and the rest special situations. I think in a market like this, and this really started kind of April of 2020, when we started forming a thesis about what we thought might happen over the next couple of years. We had companies trading at 2 and 3 times free cash flow, right? Businesses that we understood that we had watched for a long time. Companies trading at 2 to 4 times earnings, at 0.2 times book value. And so when you see that, right, you can basically spread out your investments over a much wider swath. When everything's cheap, you don't have to be quite so particular. I think that, that will change over time. I don't think we're there yet. We need to be deeper in the cycle for that to happen. When things are really cheap and the wind's at your back, it can provide a pretty big boost and unfortunately cover a multitude of sins, right? I think you can't just throw a dart at the wall and buy stuff at 30 times sales and think it's going to work out. Some will, but most won't, right? And so, but we're not at that place for value right now. We're in a much better place.